You know, gold is supposed to be the boring, slow and steady part of a portfolio. But lately, it's been acting, well, wild. It's smashing all-time highs in a way that has everyone, from top economists to regular folks, just scratching their heads. So today, we're going to figure out what is really going on with gold. So let's just put some numbers to this to see how crazy it is. For most of the last 40 years, gold kind of plodded along, giving you a respectable, if not sleepy, 6.5% a year. But just look at the last 5 years. It's been averaging nearly 20% per year. I mean, come on, something is obviously fundamentally different right now. And yeah, this isn't just a healthy, normal rally. As one of our sources perfectly put it, this whole thing feels erratic, unpredictable, and, frankly, a little unhinged. This is definitely not your standard market behavior.
To put it another way, the asset that's supposed to just play defense is suddenly the MVP, scoring more points than anyone else on the court. So the big question is, why? What is going on?
Okay, so let's start our investigation with the most obvious suspect, right? The one everyone immediately points to. Inflation. And, the logic seems pretty simple. We've all felt the pain of rising prices for groceries, for rent, for everything. So it makes perfect sense that gold, the classic inflation hedge, would be soaring as a result. But when you actually look closer, that whole story just falls apart.
Just look at the timeline. If gold was really just a direct reaction to inflation, it should have absolutely exploded back in 2021 when inflation was at its peak. But it didn't. In fact, it barely did anything. Gold's massive rally only started recently, way after inflation had already started to cool down. The timing is all wrong.
So, if the obvious answer turns out to be the wrong one, it means there has to be something else going on here. Something bigger, happening just under the surface.
Turns out the real driver here isn't a simple economic number. No, it's a quiet, strategic, and massive shift being made by the biggest financial players on the planet, the world's central banks.
And it all comes down to this one key idea: de-dollarization. Now, this isn't some chaotic, panicked dump of the US dollar. It's a slow, deliberate, and really strategic pivot by countries all over the world to diversify away from the US financial system, partly so they're not so vulnerable to things like US sanctions and policy changes. I mean, just look at this trend. 20 years ago, the US dollar made up over 70% of all global central bank reserves. Today, that number has dropped all the way down to 58%. Now, a 12-point drop might not sound like a lot, but in the world of global finance, we are talking about trillions of dollars being moved out of the dollar and into other things. And where is a huge chunk of that money going? Right here. For the third year in a row, central banks around the world have collectively bought over 1,000 tons of gold. And to put that number into perspective for you, they have more than doubled their average annual purchases from the entire previous decade. This isn't just a little bit of buying. We are witnessing an absolutely unprecedented, historic buying spree by the most powerful financial institutions in the world.
Make no mistake, this is not some short-term trend or a fad. What you're looking at is a sign of deep institutional anxiety. Central banks are looking at long-term U.S. debt and their reliance on the U.S. system, and they're getting nervous. Gold is becoming their plan B.
Okay, so this is where the story gets really, really weird. This massive wave of anxiety from central banks is happening at the exact same time the stock market is partying like there's no tomorrow. This is the great paradox we're in right now. On one hand, you have risk-on assets like stocks hitting all-time highs, totally optimistic about the future of AI and everything else. But at the exact same time, the ultimate risk-off asset, gold, is also hitting all-time highs, which signals a lot of worry about the future. And let me be clear, these two things are not supposed to happen at the same time. It's a total contradiction. It's just deeply conflicting messages. As our source material puts it, the market is sending more mixed signals than someone who says they're not looking for anything serious and then immediately asks what your love language is. That's the level of dissonance we're dealing with, and it's what's making this moment so confusing, even for the smartest people in finance. All right, so let's tie all of this together and get to the final verdict. Why does this strange, contradictory movement in gold actually matter to you and me? Because what we're seeing is not a reaction to a crisis that's already blown up. It is not panic buying. What it is preemptive positioning. Central banks are quietly and strategically hedging against a future that they are becoming more and more uncertain about.
So the real takeaway here isn't the price of gold itself. It's about who is doing all the buying. The world's central banks, the biggest players in the game. And it's about why they're buying. Because they are quietly preparing for a future that they believe looks very different from the past. Their trust is shifting. And believe me, their actions are speaking way louder than any official statement ever could.
And that leaves us with one final and honestly pretty unsettling question. The most powerful financial institutions on the entire planet are quietly making a massive strategic shift away from the way things have been for decades. So the question we have to ask ourselves is, what future are they preparing for that maybe the rest of us can't see yet?